Okay, we're reading an ABA staff analysis about private business and private companies versus public business entities. Making that determination because with a private entity, you lose your your private company reporting privileges. Now, true PS, which is trust preferred securities, is one of the securities issued by banks that could potentially make or break the bank's qualification for being considered a private company. And so under ABA's observations, on page 6, we discuss true PS. ABA has been asked whether trust-preferred securities issued by banks, not those held as investments, can result in a bank being considered a PBE. As it may appear to satisfy the first condition of criterion E of the definition of a PBE, PS are often packaged within structured securities such as collateralized debt obligations, CDOs. So rather than proceeding, let's just go over criterion E one more time. This would qualify a company as a public business entity. Under criterion E, an entity has one or more securities that are not subject to contractual restrictions on transfer, and it is required by law, contract, or regulation to prepare U.S. GAAP financial statements with footnotes and make them publicly available on a periodic basis. And the bank or in the entity must meet both of those criteria under criterion E. True PS are normally issued by bank holding companies and not by the subsidiary banks. In these situations, as deduced by the FFIEC call report instructions, it is possible that neither the bank holding company nor the subsidiary bank will qualify as a PBE. The subsidiary bank, if it has over $500 million in assets, has the requirement to issue GAAP financial statements for public inspection. However, its securities, being 100% held by the bank holding company, have a substantial contractual restriction on transfer. In this case, the first condition in criterion E is not satisfied and the company is not considered a PBE. The bank holding company that issues the true PS has unrestricted securities. However, it may not have the requirement to issue GAAP financial statements available for public inspection. In this case, the second criterion of criteria E is not satisfied and the company is not considered a PBE. Upon the FASB's issuance of the PBE definition, based on public comments made by certain FASB members as well as private discussions with auditing firm personnel and FASB staff members, we believe that a substance over form review of criterion E could qualify as true PS issuing bank holding companies as PBEs. In other words, while the form of the true PS issuance, as discussed in the previous paragraph, would not qualify the bank as a PBE, looking through the substance of the corporate structure may result in PBE treatment. However, ABA staff, FASB staff members, and the DIEP, which stands for Depository Institution Expert Panel of the AICPA and FASB, excuse me, have since had further discussions clarifying that the PBE definition is intended to be form-based with no look-through required, and it is to be applied on an entity-by-entity basis. In essence, in contrast to principles-based guidance normally given in its accounting standards, FASB elected to define PBE with detailed specific criteria that are intended to be precisely followed. With this in mind, entities that wish to qualify as private and whose banks or bank holding companies have issued true PS or other similar debt secured instruments should review their corporate structures to determine whether the applicable entity issuing the true PS has satisfied the related criteria of the PBE definition, and then discuss this situation with other portions owned and traded by third parties. In this situation, bankers should evaluate the markets, if any, on which the related debt is traded to determine whether they are considered to be public markets. Broker deposits are then discussed in the ABA observation. ABA has been asked whether broker deposits should be considered in substance securities and whether such deposits would satisfy the PBE criterion that the company has securities whose transfer are not subject to contractual restriction. This concern stems from the fact that certain brokered deposit programs are registered products with the SEC, and the broker often performs certain investment advisor services for its investors, including screening the creditworthiness of banks that hold the deposits. In some cases, the broker may maintain a secondary market for the investors. Including screening the creditworthiness. Okay. Of course, customer deposits are not securities in themselves, and fulfillment through deposit brokers, no matter how the brokered end product is marketed to the public, does not change their legal status. We believe that any end market product sold to investors has no impact on whether the deposit itself should be considered a security. If the deposit were to be considered a security merely because it is included in an investment program, then any cash that is maintained by a bank for an investment company or trust account should then be in substance considered a security. Such an interpretation seems highly unlikely. Some contend that a broker deposit program has qualities of investment securities. It is true that screening the creditworthiness of CD issuers is an important service performed by some deposit brokers, and if there is a secondary market for such investments and such programs, whether registered by the SEC or not, have traits that are similar to securities. However, the broker deposit or any deposit instrument that is sold to brokers, dealers, or underwriters should be considered separate from the broker deposit programs, which are issued and marketed by registered brokers at the bank. Therefore, we believe, in addition to not being a legal security, subject to the discussion below related to certain brokered certificates of deposit, the broker deposit should not be considered a security for the purpose of determining whether a bank should be considered a PBE. So the next section is certificates of deposit issued by the bank. Some CDs may qualify as marketable securities as defined within the glossary within the ASC, Accounting Standard Codification. In particular, some brokered CDs and negotiable CDs, which can be sold in a liquid secondary market, may be considered as debt securities that have no restriction on transfer. In our opinion, banks with outstanding brokered CDs, negotiable CDs, or any other deposit product that can be sold in a secondary market should review the structure of these programs to determine whether criterion 4 and the PBE definition is satisfied, and thus the bank is considered a PBE that does not qualify for private company counting. The last section, I believe, is periodic review required. While a company is not expected to move in and out of PBE status on a quarterly basis, ABA recommends periodic review to determine whether a bank qualifies as a PBE. Specifically, certain events should cause reconsideration of the PBE status. 1, 2, and 3, this is changes in governing documents or contractual arrangements with its holders of its securities. New products are the issuance of specific debt or equity securities or other products that could be considered securities, and new